day, everyone. My name is Stewart. I'm the chair and CEO of QC Copper and Gold, and we're here talking about our what we've been doing in 2022, and most importantly, what's on the horizon in 2023, which includes a major milestone. Catalyst is our updated mineral resource estimate, which is going to be upgraded from 2021's resource, which was 104 million tons at nearly 0.9% copper equivalent. That's a pit-constrained resource. Since then, we've completed nearly 60,000 meters of drilling, and our technical team is busy compiling all of that resource and preparing to put it out in this updated resource, which we expect to come in June. So that's the major catalyst. Between now and then, we've got about 10,000 meters of drilling to be released. So there's some news flow on the horizon before that major catalyst. But aside from that, there's lots going on behind the scenes, and I'm happy to drill down into context with you, Merlin. So good morning.
Good morning, Stephen. Really nice to talk to you again. It's been almost a year since I last spoke to QC Copper. Now, obviously, your flagship, Opemiska, it was an old mine. Can you just remind me of where you are in terms of the previous operation and how long it's been idle for, and how you're refocusing your attention on this asset, please?
Sure. So the Opemiska was, in fact, 4 high-grade underground vein system mines. It was operated by Falconbridge. It started in the 50s and it shut down in 1991. The Opemiska is the project. And then within that, there are 4 mines, the Springer and the Perry, which is what we're going to be talking about today and what we've been almost exclusively focused on in terms of delineating resources. And then there's the 3rd and the 4th mine called the CuEq and the Robotai, which we have a lot of data on, historical data. We have some drilling, but we have not yet systematically drilled it out to bring it to the 43-101 like we have the Springer and the Perry. In terms of provenance, when it shut down in 1991, Falconbridge decommissioned the mine, took away the mill, and then it was staked by a local Quebec family called the Gauchers, very well known. Edwin Gaucher is a very well known Quebec-based mining entrepreneur. Our vice president of exploration, Charles Beaudry, had a relationship with the Gauchers, had been assisting them prior to the incarnation of QC Copper, had been working with the Gauchers to digitize a lot of the data and advise on them, because Edwin is a geophysicist and, of course, Charles is a geologist. Charles had been sort of in my ear for years to try and acquire this project. We made many iterations, and it wasn't until, or I should say attempts at acquisition, it wasn't until we spun off QC Copper and Gold from another one of our companies called Ore Finders, and created a vehicle dedicated specifically to develop and raise the capital for the Opemiska. And the idea was really to reinterpret what this was. And as I said, I described what it was. It was underground mines, and reinterpret it into a bulk tonnage open pit deposit, which I think we've gone a long way in doing in that maiden resource. We still have a long ways to go. But really what I want to emphasize is this is early days in terms of defining what the Opemiska and really the Chibougamau district is all about. The only resources we are going to be publishing is on 2 of the 4 mines. We've got the 3rd and the 4th mine, and then there's lots of other exploration targets, that we can talk about later.
When you say defining the resource around the first 2 old mines, so both of those have got shafts. Both of those were based on vein deposits, and effectively what you're doing is delineating a lower grade bulk tonnage resource around those 2 systems. Why did you choose those 2, and why did you not want to start on the first 4? I mean, if they were 4 mines, why did you only choose 2?
Well, a few reasons. One is those are the biggest by a significant amount in terms of historical production. So we had the most data, and so that just sort of was sensible to us. We did some test drilling initially on the Springer project and got great results back in 2029. And so that's really where, the bulk of the resource in terms of modern was delineated. And that's where we had the most resource in terms of data. And so that's where we decided to focus. And both the Springer and the Perry, I'll note, are right beside each other. So there was the opportunity to create a so-called super pit. The 3rd and the 4th mine, again, the CuEq and the Robotai, are about 2.5 to 3 kilometers away, but will not be part of a cohesive pit. They'll be so-called satellite deposits, if as and when we get to that stage, and we anticipate that we will, but we're not there yet.
And there's a town nearby. The pit will come quite close to the edge of the town, won't it? Where are you in the permitting and the kind of the brownfields nature of the project?
Well, we're not permitting, for construction or anything like that. We're nowhere near, just to be clear. So we're certainly beginning the inputs to permitting, like environmental baseline, obviously community consultations with the town, the region, the province, even the feds, and of course the First Nations. We're fully permitted to do what we're doing, but we've been drilling. So, we are not permitted to build a mine. That is years away. Though requires certainly, as I said, long lead items. To answer your question, we are at the doorstep of the town of Chapais. We are in the district of Chibougamau, and Chibougamau also has a town which is about 30 kilometers to the east. We are proximate to Chapais. And so there's a lot of questions around, are we going to move the town? And the answer is it's possible, but we don't know anything for sure at this point in time. Ultimately, what we can say confidently now is that the bulk of the resources are, further to the west and don't directly impact the town. Is there mineralization under the town? There's no question about it. The question is, it's a trade-off. It's an economic study. But it's lower grade material and there's not a lot of it. So does pushing back to get that material justify the extra cost, burden, expense, timeframes to do it? I mean, we don't know that answer yet. We published our maiden resource, which is 104 million tons back last year. That was an unconstrained model. The only constraint was an open pit, but it didn't consider, where a town was, where anything was. It was just, the approach was, let's use every piece of data we have and evaluate, let's define what this is. I think this updated resource is going to take that to the next level. Where we've been focused on, and we could talk about where that drilling has been, but really it's about optimizing and infill drilling on that pit, as well as some step outs. But I still don't think that we'll have, in fact, I know we won't have any definitive answers around, how much we will impact the town. We're going to impact the town until we have the PEA.
It's almost a generation away, isn't it? Or possibly more. 1991, the kind of the last people who are working there, they've had a 30-year career outside of the mining sector. How tolerant or how accustomed is the town population to mining? I mean, is it something they just remember and they've kind of grown away from?
The town. Okay. I mean, it's interesting you say it. It is a generation ago, but there's a lot of people who work for us right now who were underground.
Right.
So it's not too far gone. And does the town remember the mine? Well, I mean, the town exists because of the mine. There's no question. I mean, there was no town before the Opemiska exists. So it is a mining town. It is mining culture. People are very welcoming there. They understand exactly, why the town existed historically, and if the town is expected to thrive and flourish in the future, they need business. I mean, it's the extractive industries and forestry. I mean, that's those are the primary industries up there. People, including the town, and you can please, I encourage everybody to go on our website and see, we interview the mayor, we interview the townspeople, and you can see for yourself what they say. I mean, everybody is cautious. Nobody, everybody has questions naturally about, open pit mining, and that's rational. And we take that very seriously, and we take nothing for granted. And we've invested quite heavily in terms of communication, because that's the biggest risk. It's the social license. The feds will be behind us because we are copper, right? And copper is the certainly one of the most, if not the most strategic, quote unquote, green metal. The province is behind us, no question about that. But it all comes down to local buy-in, and that's the town, and that's the First Nations.
Interesting. Do the First Nations have a particular angle on this? I mean, surely it's just another mineral project, and presumably since it was a mine beforehand, they have got their heads around, First Nations have got their heads around that particular site being a mining site.
Well, I mean, their angle is partnership. Like, I think the First Nations in particular, it's the Waswanipi and the Ojibougamau, who are the local First Nations in the area. They are Cree. Cree are very sophisticated First Nations organizations. They're nations. And they understand the benefits that economic development, in particular mining, can bring to their communities. I mean, I think they're, and then when I say sophisticated, they have flourished ever since the hydroelectric developments that happened back in the 70s, which provided all sorts of economic opportunities, which they've thrived upon, and they've captured that, and they've grown it by partnering with all sorts of mining companies. I think it's every situation is a snowflake, but I think broad terms, Canada is the best place in the world to do business in mining, and that ebbs and flows. And then but Canada's a big spot, and so Quebec specifically, because of the mining culture of the people of the North, because of the sophistication of the Cree in terms of their acceptance and understanding of the value that mining can bring to their communities, and because of just the province. You look at the Plan Nord, which should be, every province should have something like the Plan Nord. Unfortunately, it's only Quebec, to my knowledge, but they are so supportive in terms of building infrastructure, permitting. Drill permitting is quite streamlined. That's something you mentioned. Obviously, mine permitting is a whole nother ball of wax. But we'll get there and we'll have the support. But I mean, at the end of the day, I think, again, I'll emphasize the bigger levels of governments are supportive of industry growth, particularly if you're a copper mine. But if you don't get the local buy-in, you're going nowhere fast. And so that's where we've invested our most of our time and energy.
Are you getting pushback? Are there new generation of anti-miners, or is it just the kind of the inherent natural caution or that anybody would have when there's potential new development just over the road?
Well, I think it's just natural questions. We host, at minimum, we go up there twice a year and we host town halls. And we do it at the local community center, and we get a very good turnout, 50, 60 people. And then all the local politicians come, et cetera. And we also, we host other private meetings, but they all come out there and they have questions, which is natural. And it's about communication. That is the biggest focus. And also within that is managing expectations.
Absolutely.
Because they some of these people are not, they don't do this for a living like, you and me, Merlin, and they sort of say, oh, we've got a resource here. When are you building the mine? Tomorrow? Is that? So it's like, there's a big process. These are the risks. These are the challenges. If we did build the mine, there's a lot of things to consider. I mean, even if we don't move a house, okay, and it's certain, it's possible we do. But even if we didn't, there's noise, there's dust, there's even to the local employers. The bakery shop now has their labor costs are going to go up because we're a big employer. So there's a huge amount of considerations just that you don't even think about that need to be discussed. And so, again, we have taken that very seriously. When we published the Maiden Resource in 2021, we hired a gentleman by the name of Derek Teven. Derek's our vice president of strategic engagement, and Derek is, I think, bar none, the most sophisticated, call it, soft guy. Soft's not the right word, but sort of not technical, but in understanding the needs of the First Nations, the community, the permitting process, and designing a program to engage them directly and keep everybody well informed. On the benefits and risks, because it is a trade-off. And so that, and something that we've also started, we haven't formally brought it together, but we've reached out to all the parties, is we want to create a stakeholder group that meets regularly. And so we want to get ahead of these concerns. We don't want to find out about any concerns after the fact, because there are concerns. There always will be. We will never be able to please everybody. But I think by and large, the town is on side. As I said, it's a mining culture. And I think that they want economic development more than anything. I think the town is sort of, I don't want to say dwindling is not the right word, but needs an economic push, needs a reason for the young people to stay, and this gives them that opportunity.
Absolutely. The nail on the head. You need a reason for the young people to stay or to go away and come back. There has to be some kind of regeneration or economic activity. Final question on the town side of things. What's the population?
It's about 1,500 people.
Okay, thank you. Now, when we spoke last year, quite a lot of the emphasis of your drilling plan was to reclassify internal waste within a conceptual envelope of mineralization from zero information, kind of where you could not ascribe grade to it, to drilling it out. And even if it's low grade, kind of the 0.2s, 0.3s, 0.4s, it would actually be above the cutoff grade process. Can you, how has that process gone? How's that work come through?
Well, you're right. And I would say, first off, it's exceeded our expectations. And just a comment there, in often case, it wasn't about zero information. It just wasn't enough information to bring it into the 43-101 category. So it's about increasing the confidence, increasing the drill spacing, giving us more information on what we had defined as the halo mineralization, right? And which we're now redefining as to a mineralized envelope, so that everything, the vein and the hanging and the footwall mineralization is now just a mineralized envelope. So it's about, we've been, drilling, increased density in those particular areas where we're going to get, where we had information, but we want more, and we believe we can bring that into the inferred, maybe into the indicated category. So I think that has gone very well, and I think that's going to be very material. One is because just anything above 0.2 is going to be considered ore and not waste. So we take it from the expense pile and put it into the revenue pile. That and I think we discussed in the interview last time how that 1 ton of expense going into the revenue pile is really quite helpful on the strip ratio economics. And so that has been a core focus of us, and I would say where the vast majority of the drilling to date or since the last resource has gone. And again, I would say it's met or increased our expectations. Not to say that we're looking to, it's not going to be a 0.2 percent deposit, not at all. We're going to maintain the grade. The grade is our competitive advantage relative to a porphyry deposit with 0.3 to 0.5. We are going to exceed that grade. We are going to maintain our competitive advantage there. So, that's been an area of focus. And there's been 2 other areas of focus that I think are going to be relevant to this MRE. One is the eastern veins, which is really step out drilling. It's to the north and northeast of the deposit. We had good results on our first pass drilling in 2022. And that was the 10,000 meters we started in January of this year. It's now complete. So we had 3 rigs banging off 10,000 meters quickly. So we think we have the opportunity to expand the pit. So this is not infill, this is step out. And then the final area, which I think is going to be very material, is going to be our starter pit. We do view this as being, the deposit as we are going to define it is going to have likely multi-decade life of, feed. Okay. However, when you have a deposit like that, it all becomes about the early years and getting your payback. And so, in our maiden resource, we had nearly 11 million tons at 1.25%. We drilled a lot in that area, and we have a good deal of confidence that starter pit itself, which has a very low strip, very high grade, is going to be larger. And so that, again, as we shift towards a PEA, that's going to have material impacts. The crux of this whole exercise, if you will, if I can call it that, is to define and convince the world that we are going to build a mill. Okay, a mill of significant size, something 25,000 plus, and then the whole district opens up completely.
When 25,000 tons per day.
Well, that back of the envelope, we're not there yet. I mean, that's internal stuff, but we're not looking at a 5,000, we're not looking at 10,000. This is going to be a big mill.
And what would that? And I know you haven't done a PEA, and I'm not just trying to push you into a corner, but you must conceptually think about this being a producer of a finished product, copper. Are you thinking 30,000 tons per annum, or 50,000 tons per annum, or 75,000 tons per annum? Do you have? I know that there's optimization to come, but do you have a kind of a mental concept yet in your head?
Well, I think it's too preliminary for me to start talking about production type scenarios. So I think I'd be wise to sort of not comment too much on the production profile until at least we have the PEA out there, because there are many questions, including a mine plan, and maybe it's phased, so there's too many questions. I don't want to get into specifics. I think I just want to focus on the geology, define that to its fullest extent, with specifically on the Springer and the Perry. We're going to put economics on that open pit, first pass PEA level economics. Simultaneously, towards the second half of this year, we're going to be drilling aggressively on the Cook and the Robitaille. So again, we've got the digital models, just like we did on Springer and Perry. So we have a good understanding of what they are, but they need to be drilled out systematically, like we've been doing for the past 2.5 years on mines 1 and 2. So we're going to catch those up there, bring those into, so all 4 mines are theoretically in the 43-101 category. It's probably unlikely that those will be considered in the PEA, the first PEA. But I think certainly when we go to upgrade the resources, i.e., drill out everything to bring that all into the measured and indicated category in preparation for the PFS, we will have 4 deposits, at minimum, that we will be looking into the mine plan, and then that comes into the mine plan itself. It's all about grade, when you're evaluating things in the way modern finance values things, anything beyond 15 years doesn't count. So we're very cognizant of that, and that's why, again, going back to the starter pit, that's why the starter pit is going to be so important, because that will give us the justification, of the economics to build that pit. And then I think that build that mill. And then once you have the mill there, I think this whole area is open for generations. That's the sort of potential that this district has. It's never been properly assessed in the context of open pit. There's overburden there. So there's no, the Springer outcrop. That's why it was discovered. Otherwise, these are geophysical targets. It's a nascent area, even though it's a mature area. It's mature in the context of underground geophysical targets, but it's totally nascent in terms of understanding the near surface potential.
You've already got 104 million tons in the 2 categories, measured and indicated and inferred, and that's just on the first 2 old mines. Let's say you add another 50%. You're talking about a relatively large tonnage, long life asset. These could potentially be quite high throughput operations, which is presumably why you're talking about 25,000 ton per day. I know you're not there yet, but just you're thinking about the larger end of the operation, or the larger scale than smaller.
Well, absolutely. All else equal, in mining, bigger is better. But I do think that this project is, just the right size, Goldilocks, if you will. It's it's not too, but this is not a porphyry. This is, to be clear, it's going to be long life and it's going to be large, plenty big enough. But it's not a 5 billion ton BHP project, so which would take 20 years to permit. Talking about permit, this is just the right size, and I think this has the potential to be built. This cycle. Now, define what a cycle is, but I mean, it can be fast tracked into development, especially if the government and the powers that be get their act together on the critical metals strategy, which I'll note that Quebec has a very well-defined and a proactive critical metal strategy, which of course copper is right there. So if they are going to meet their forecasts, whether it is COP26 or 27 or, net carbon zero by 2035, whatever it is, they need more copper. Not only do they need more copper, I really do think that they're going to need more copper in Canada. Or call it on the North American continent, north of the Mexican border, because, geopolitical things are getting much more complicated. There's wars going on. There's threats of more. There's all sorts of, risks that I see increasing, frankly. And so I think that there's going to be a significant premium associated with projects that are in friendly jurisdictions with easy access. And that goes on top of that. And on top of that, I'll layer on the fact that in Quebec, everything is produced through hydroelectric power. Green, clean, low-cost power. So from an ESG and a political stability situation, this project I don't think, has too many peers.
But when you look at the peers, your valuation seems to be lagging behind. Your market capitalization is 22 million Canadian. Why is that? Can you give me an explanation for the relatively poor performance stock-wise over the last 12 months? Well,
I agree. It's something that I rack my brain with, constantly trying to figure out how can we get our shareholders and prospective shareholders to see the value. When we came out with this resource, we came out of nowhere, right? We were, almost inconsequential in terms of market cap. And then we came out with 100 million tons, which is about 2 billion pounds of copper in a pit constrained with, clear path for growth. Took the market by storm. We went up and we went from probably 15 cents to, I think we might have hit 40 cents. And then we financed right at the top. I mean, we financed ourselves very well. which is, very important. And then ever since then, we've been infill drilling. And so, infill drilling and the results that we've had, I think, are really quite amazing. And again, I think they've exceeded our expectations, but they're infill drilling, deemed not sexy, non-discovery. And so, paired with that, 2022 was sort of a bit of a not great month. Not to make excuses, but I mean, just from my seat, it's been tough. And then I think we have not yet rebounded. I think everybody is waiting on this updated resource. So this is the major catalyst. We had guided the market that we would have it out in December, and we're now in February, so we're a couple months late, and we still have a couple months ahead of us. This is an impatient market, so I think I wouldn't be surprised that as we get closer and closer to this catalyst, you see a run up in our stock, because people will look at, well, what happened last time when they put out this resource? The expectation, and certainly mine, is that this is going to be bigger and better. So bigger in terms of how many copper pounds this will be. And the strip ratio. And so I think, those if there are sort of challenges that we want to hit head on, again, it's always, the biggest challenge is people and social license, something that we've already discussed. We need to get our strip ratio down, which is exactly what this drill program has been focused on, to optimize it and show that to the market. And then, of course, we have the town. That's always something that people ask questions about, and rightfully so. And so, there's no question we think that all of these things can be addressed in time. And we're ultimately going to deliver, a project, but it takes time. This is a patience person's business, in my humble opinion.
There are two classic ways that exploration companies drive up value. One is through growth of the resource, which is typically step out drilling and exploration. You're expanding the envelope of mineralization, and the other is de-risking and getting the value of what you have up. By virtue of doing infill drilling, you're in some ways you're not expanding your envelope. You're just focusing on what you've got and improving the value within that envelope. And that's the crucial step, isn't it? To take the capital value per ton or the value per share up through the de-risking process, which has to be through that first step, MRE, and second step, the economic study.
Well, you talked about growth. I mean, look, there's no question in my mind that the best ROI is in pit, what we've been doing the past year to optimize, what we have a really good understanding of and what we see very clearly. Okay. So it's not like we're going after blue sky. We see exactly where the challenges are and how to solve them. And that's what we attacked. And I think we're going to deliver. And then we've got growth, so again, as we just take a step back, we will then define and quantify the economics, because everybody wants to see not only just the size of the ore body, but then the economics behind extracting.
Yeah,
and then,
what falls into a pit.
Exactly. And then we've got growth. And then there's lots of growth coming on, the CuEq and the Robitaille in the second half of 2023, because we have to make decisions based on availability of capital, availability of people. We can't do all things. We are not Rio Tinto. We cannot, we have to sort of triage our efforts. And so where are we going to get the best bang for our buck? And that's clearly on the pit right now. That is going to be, behind us soon. Then we shift in terms of, again, we're going to be bringing on somebody who's going to lead the engineering challenges, because we're very much focused on geology. And then Charles is going to shift his focus to what he does best, exploration geology and rinsing and repeating the process that we did on the Springer and the Perry, and doing the same thing on CuEq and the Robitaille, along with a couple other, things that we're not even sort of discussing now, but we have a very clear plan for second half of 2023 and the first half of 2024.
Can we talk about budgets and treasury?
Sure.
What's your cash position at the moment, and what's it going to take to get through the mineral resource estimate and then the PEA, and how much is allocated for the exploration side of things?
Sure. So at our most recent, our posted, financial statements, which are much dated. I mean, I think it says we got about $11 million in working capital. We're coming out with our annuals towards the end of this month, this being February. And that's going to probably have a 9 in front of it in terms of cash. You want to tack on our working capital, our current assets. We also own 10.7 million shares of baseload energy. So, that's about $5 million, mark to market of marketable securities. So I would say we're quite well financed. So we're in a strong financial position in terms of budgets. The PEA is not all that expensive itself. The PEA is a desktop study, so it's not a huge cash burn. We're going to be burning less money than we did. We probably spent $11-12 million in the last 15 years. Obviously, that's 60,000 meters is a huge cash burn. We've got I think we have about $5 million planned for exploration drilling in the second half of 2023, which is largely focused again on the CuEq and the Robitaille, but also we have another deposit called the Roger that we're going to spend a little bit of money on. That's 500,000 ounces of gold that is up, on the rail, not too far from our project. Again, an example of a satellite deposit that is orphaned. 500,000 ounces without a mill is, almost useless. But if you have a mill there, it becomes real feed. So I would say $5 million by most standards is a pretty healthy exploration budget that will be expended in parallel as we develop and work through the PEA process.
What's the feedback you're getting from investors? Have you what's your relationship with particularly with any key institutions? Have you managed to get any funds to buy on market, or are they saying let's wait until you do the next capital raise? I'm particularly interested in the kind of the larger institutional end of things.
So we're very much an institutional story. When we started off, we were a retail story, but then the last two financings were all institutions. In particular, we have a lot of support from the Quebec-based institutions who are very supportive and very important to have on your registry. Everybody is supportive. I wouldn't be lying if everybody, included myself as one of the largest shareholders, not disappointed and frustrated at the share price. But I think that particularly the institutions have a long-term view. These people have sizable positions that they don't get in and out of, relatively easily. So they have to take a long-term, nobody has to do anything, but I think it's wise to take a long-term view. I think the smart money is waiting to see what the MRE is going to say. I think there's a great opportunity right now. We've got, copper is now down, flirting with the sub $4 level. So, we sort of track that a little bit. There's an opportunity to get into QC copper, I think at, outrageously low, valuations relative to our peers and relative to the opportunity and the milestones that are ahead. But there's going to be news flow in terms of drilling. So there is some news. As I said, this market is an impatient market right now. But if you can afford to be a little bit patient with us and evaluate the moving parts, I think it's a good, risk reward value opportunity right now. And I don't think, I have a high degree of conviction that there's good value in QC copper right now.
At Crux, we looked into kind of counter-cyclical investments in the back end of last year. And to a degree, what we were looking for were the companies that were in a stronger position now than they were a year earlier, but the share price had been crushed by the market. It was a risk-off year last year. Junior resources stocks across the board got hammered. In some ways, what you've just described is that situation that your share price is depressed, and yet your fundamental asset base has improved, particularly within the light of the overall global security, supply chain, and copper market kind of fundamentals.
Well, I think we can talk about the macro on copper if you like. To me, it almost doesn't matter. Because we focus on the asset. I think the asset must speak for itself. We don't want to be a success because copper's $10, although, $10 copper is on the table, in the horizon. So are we counter-cyclical an investment? Absolutely. Are we stronger than we were, than we put out that maiden resource? Let me be very clear. Irrespective of what the numbers say, the quality of this report is going to be immensely better. We have spent a ton. We brought in a resource geologist specifically for this, which we didn't have. We didn't have an internal resource geologist prior to our maiden resource. As soon as that came out, we brought somebody in and he built a team around him, which was all about identifying the gaps in the report. Where can we get, with the eye to be able to answer the questions to whoever wants to come and buy and build this thing. What are they going to ask? And so, and build that database and get it, the foundation of which everything comes from solid and sound, and to be able to answer as many questions as we possibly can. So I think the quality, and particularly the geology, I think that has been a heavily laborious thing. We didn't capture the geology, the logs. This time we've captured the logs, which is a very, manual process. It's not just numbers, it's descriptions of geology type. Why that's so important is that it goes back to the mineralized envelopes that we're now defining. And we now define we domain the geology, not just by the grades, but by the rock type. And so again, that is extremely helpful, and it's going to add confidence, and especially for the QP when he comes to see, or he or she comes to see, and get the boundaries of these lower grade envelopes. That helps us define it. So again, it's going to be much better resource. We're going to have updated metallurgy, which is critical. This mine has 50 years worth of mine level metallurgy, which is incredible data to have, and a lot of data. But what it lacked was data on the lower grade material, which has similar but different characteristics. It's potentially will add the silver into this. We didn't, we report silver. I think we report silver, cobalt, and zinc on all of our drill results. Most of it is uneconomic, but I think the silver will certainly be payable. There was I think there was 300,000 kilograms of silver payable from that mine when it produced. That's $250 million worth of revenue. We didn't include that in our maiden resource. We're still not certain if we're going to include it. I think it's very clear that, when this does go into production, and we believe it will, silver will be payable. The question is, does the metallurgy today support including it? So, that could be a big boost. So there's still lots of moving parts here. As I said, off the top, this is the early days of the Opemiska itself. This is the early days of a total reinvigoration of the Chibougamau district.
Stephen, thank you very much. In your most recent news release, I think you'd say that the mineral resource estimate you're aiming for June in your target line.
That's correct.
And then in the second half of the year, at some point during that, there would be the preliminary economic analysis.
We're already starting on the long lead items, so like the geotechnical, the metallurgy, the environmental baseline, all that stuff. We haven't started on the economics and the engineering, independently. That'll be begun as soon as they call it the data pack is handed over to the independent QP for this resource. Then we can breathe a little bit. Everybody may take a couple weeks off, and then we come back, and then we again it's shifting gears towards this PEA, and then let's drill that mines 3 and 4 and get those up to the 43101 standards.
And in the next 3 or 4 months, what's the news flow going to be? What are you going to be able to incrementally release prior to the full MRE?
We have 10,000 meters of drilling, which has all been complete, and we're waiting on assays. This is all of this drilling, virtually all of this drilling is on the eastern veins. If you go to our website and you look at our pit model, you can see it's there. It's well defined so far. It needs further definition, which is exactly what this 10,000 meters is. If we can, get it up to snuff, so to speak, that'll be included in this updated mineral resource estimate. So that's step out drilling. So maybe that'll get people exciting if we can deliver some good results there.
Good. Well, good luck with it all. It feels as if the market hasn't kind of caught on. They're looking for some kind of catalyst. It's almost like, build it and they will come. You've got no idea that when on timing, but you can feel relatively comfortable that if the asset is good enough, the valuation will follow eventually. Well,
the asset is good enough in our opinion, but we still have work to do in terms of de-risking and defining it. As I said, this is patient. We're here for the long haul. I'm not going to sell a share until this thing is sold. And the same is true for everybody in our team. I almost say I don't care when it happens, because I have a strong conviction that it's going to happen. I want it to happen sooner than it will. That's it. Just like all investors, we want to realize a return on our investment. But we're very, very confident. Again, we have a basket of companies, a portfolio of assets within that company, and I'm very confident to say that QC Copper, or the Opemiska specifically, is our flagship. It in terms of probability, in terms of becoming a mine, this is the best asset that I've ever worked on. And so I'm very comfortable owning my position, which I've increased fairly significantly since that resource comes off. You'll probably, when the blackout's over, you'll see me participate again. So I do put my money where my mouth is, and I think it's a good investment if you can be patient.
Are you operating kind of an open, fully transparent process? I see at the back of your presentation you've got all of the drill results listed, but are you getting inbound from corporates already? Is there a traffic through your your data of industry participants with a view to us? I mean, you mentioned the word sale there, but is it already picking up attention from the corporates?
We get lots of calls from all over the world. From not just copper producers, sort of mid-tier copper producers, but you'd be surprised how many gold companies are interested in copper, but also copper in Canada. People who want to diversify away from risky areas and looking for great assets. Don't forget, we are QC copper and gold. A lot of our payable revenue comes from gold. The CuEq mine that I talked about, which is the fourth mine, that was a gold mine, not a copper mine, had a copper credit. So we get an awful lot of inbounds, and everybody so far gets a wait and see. Nobody on my team is spending any time talking to the majors right now. One is because I have them laser focused on delivering this MRE, which is delayed. So we don't have time to spare. And two, I don't want their money right now. I want their money when we're $250 million and they write us a $25 million check for 9.9. We have no problems to access to capital. We're well financed, and whenever we want money, it's there. I don't say that flippantly. It's never easy, but it's a function of its cost. It's not a function of its availability when you have a project, at this stage and frankly this valuation. So I much prefer passive money. Money that doesn't indicate that we are committed to anybody and we are committed to nobody.
And when you're at $250 million market cap, if someone says they'd take the whole company instead of taking 10%, that's a conversation for the board?
Of course. I mean, any real offers we will consider. But, if we're trading at 250 million, they better come significantly higher than 250 million.
And are you not handing out NDAs like confetti at the moment, not signing CAs?
No, it's just not. It's not the right time for us. Again, dealing with these inbounds takes time. You have to get them in. You have to handhold them, and we don't have that time. I mean, we have to stay laser focused on the task at hand. And as I said, it's not investment that we're particularly chasing. I think gone are the days where when you're a small company and you get a major to come in and take a small bit. Does that give you the stamp of approval? Not really. So I don't really attribute a whole lot of premium to their money, which typically comes with strings. But more importantly, it's not the strings. I don't mind so much the strings as I do the fact that I've given a competitor a 10% lead on somebody else, and now's not the time to do it. Yeah,
no, I totally agree with you. I'm not a huge fan of indiscriminate major endorsements like that. There are cases and exceptions when it makes sense, but not in all cases. Why is the MRE delayed so much?
Not so much, but certainly delayed. We had guided December. It's now February. It won't come out till June at the earliest. The 2022 was challenging in terms of turnarounds, the ability to get those assays, build it into our model, and then follow successful results. That was, I said, probably the story of 2022. Beyond that, not only is drilling, there's a lot of work on the drilling, there's a lot of work on the database. I had referenced it before, is capturing the geology. Huge amount of work, very difficult to assess on day one. How long is this going to take? And it's taken longer than we anticipated. And there's been all sorts of challenges. I say very, very candidly, this database that we inherited from Falconbridge, which is all the historical data, has been, both a blessing and a curse. A blessing that it's fast-tracked this project, giving us a wealth of data, high-quality data. I emphasize one continuous operator throughout and 50 years. And they were good operators, good record keepers, but it's all analog. And so the curse part is like to manage that, to sort of digitize that, huge amounts of data, not just numbers, but sort of photos, mine level plans to sort of scan those, jig it all. I mean, it's a huge task, and it's taken a lot of time and effort. But to answer your question, the geology, capturing the textual geology, whether it's a gabbro or whether it's, whatever it is, putting that in there and domaining it, which again is it's a huge investment in the quality, the actual quality of the database and the quality of the MRE. It's been laborious, but I think we came to the conclusion that it was the smart move to make, because when we do open the kimono to the majors, they're going to want to see that, and we can't say we don't have it. we want to be prepared with every question they have and be able to answer it succinctly and confidently. And that's how we're approaching this. As much as we do speak to retail, this whole process and this whole database and this company is designed to eventually speak to those who will build and operate this mine, because it's unlikely not going to be us, or it's likely not.
They're ultimately your end customer. Correct.
And that's who we try to speak to. But as I said, we're not speaking to them just yet because the time's not right, and timing is everything.
Yeah. Stephen, thank you so much. It's been great. I look forward to the next one. I don't know, perhaps if the process of those next 10,000 meters, or possibly even as far out as when the resource comes out, but it'd be certainly good to stay in touch with this.
A pleasure, Merlin, and I appreciate your interest, and good seeing you.